Alright, good afternoon now, folks. We head into US trade on Monday, the 2nd of October. Now, we're at the start of a fresh week, at the start of a fresh quarter. Well, it is more of the same from Q3 into the start of Q4. We'll have a look across markets as we go on through this with a lack of fresh fundamental drivers, which means that the prior trends do continue, which is not too unexpected, judging off the video I posted earlier looking ahead to the week ahead, suggesting that things were set to continue if there was anything or was not anything to change the recent trends. You can see Wall Street set to open lower as yields rise ahead of Powell's speech. Yields continues to push higher. And Jerome Powell speaks at 4 o'clock. We'll have a chat about Jerome Powell now in a minute. But really, interest rates higher for longer, potential for another hike, yields pushing higher. Again, it's just another situation where stocks sell off and the dollar strengthens. Apart from that, no clear, fresh fundamental drivers. Lack of news flow means that this happens. You can see US equity futures lower across the board, European equity futures lower across the board, Asia Pacific equity futures lower across the board, bond yields globally higher, US dollar across the board higher. Your Aussie and your Kiwi are lower, which is it goes in line with stock indexes lower. You can see your Swiss franc strong against everything except for the US dollar. Swiss franc, Japanese yen, stronger against everything except for the Swiss franc and the US dollar. So clear risk off trading in markets this morning, but not a complete massacre in terms of risk off, as yields are higher and bonds continue to be sold. So this is not necessarily risk off, this is just generally what happens when interest rates rise, and that is what's happening with yields pushing higher. Again, as I said, stocks across the board lower, US dollar across the board higher, Swiss franc and your yen relatively higher, plus your Aussie and your Kiwi lower, which is good, clear cross-asset correlations, exactly the way we would want to see it. Pretty clean trading over today's Monday session, which is not something you get too often on a Monday morning. Rattle through here, there's a bunch of PMIs out of Europe this morning. Hadn't really shaken markets up too much, but manufacturing out of Euro. Now these are final figures, there's flash figures as well, but out of the Eurozone in line with expectations, just still pretty negative. Below 50, just a negative number. German manufacturing missing consensus. A couple of the smaller ones, France, Italy, Spain, all doing kind of alright for themselves, but still substantially below 50. Certainly not positive by any stretch of the imagination, no matter where you look in these manufacturing PMIs this morning. Unemployment rate slightly ticks down in Europe, but it's not likely to impact too much, as the central bank suggested that they are pretty much done with their hiking cycle. That brings us on to the manufacturing PMI though out of the US. Consensus for 47.8. Now if it did come in 47.8, that'd be above the 47.6. Not exactly the best number of the world, as it is still below 50, but that would mean 3 straight months of higher numbers in the manufacturing PMI. So again, not positive because things are still below 50, but sentiment starting to pick up, sentiment starting to trend higher. And that would be another reason for stocks to continue lower, yields to continue higher, drag the dollar higher with it. So that's what we'll be looking for in today's US session this afternoon, this manufacturing PMI. Now, does it change the picture slightly, and does it come in lower than anticipated, lower than the previous month? Then that might spark some downside in the US dollar. Or does it come out in line the way it's supposed to, or even beat consensus, and does it allow the trends to continue? Now we can see over the course of today's trading, you see the S&P, the Dow Jones, the Nasdaq, the Russell, the DAX, Euro stocks, and the FTSE all continuing lower. Now we did have a bit of a bounce back into the end of last week. We were touching on it. Is it month-end flows? Is it a changing of the trend? It's pretty clear to suggest, pretty clear to see how markets have woken up this morning to see what they think of that. Now the trend is still lower across all of these, as you can see. There's a little bit of a bounce back into last week over the end of Wednesday into Thursday and Friday, which is a pretty solid bounce back, but pretty solid bounce back on an hourly time frame. Once you change it to a 4-hour daily, the trend is still pretty clear, right? And the fact that has turned around and continued lower, is that market showing its hand as we come on into this week. You got the VIX rising, you got stocks across the board moving lower. You come around to the dollar then, where you can see your Aussie selling off, Kiwi, Euro, Sterling all selling off. You see dollar Swiss, dollar CAD, the dollar index pushing higher. Dollar yen lagging a bit. Dollar yen's not really pushing higher too aggressively. maybe off the back of equities selling off a bit, lending a bit of support to the Japanese yen. But markets may be seemingly reluctant to buy it up into that 150, which is understandable given the ever increasing possibility of some intervention from the Bank of Japan. And the Bank of Japan do intervene and push dollar yen lower. You do not want to be long dollar yen in that scenario, so we'll wait for that to happen. Dollar yen, one to stay clear of, unless you're shorting dollars. I mean, if you're going to short dollars, by all means, dollar yen's not a bad one to short, but I'm not sure that is the best of ideas. You can see the way the US dollar is moving. Aussie, Kiwi, Euro, Sterling, dollar Swiss, dollar CAD, the dollar index all continue to push higher, and that is the way markets are moving, and that is the way markets have opened up this morning. Is that them showing their hand for the week? Are we done with month-end rebalancing or month-end flows, whatever way you want to try and put it? Certainly is in line with a longer term trend, and the trend is your friend. The US 10-year yield, the US 2-year yield, both continue to push higher. I was going to say reach fresh weekly highs, but it is only Monday. So a longer term trend, okay, we had a bit of a pullback last week, which was nice after a bit of relief to markets over the course of Wednesday, Thursday, Friday. Helped the US indices, push a bit higher, but ultimately the trend is still bullish. I mean, you can zoom out as far as you want. Any daily, weekly, whatever time frame you want, that is an uptrend, and it's pretty much been an uptrend since middle of 2020. So that is the way they are going. You're not going to want to jump in front of that. Short bonds, which means long yields, short equities, long US dollars continues to play out, and yields continue to push higher, and gold just continues to get whacked. I mean, we all know gold does not like interest rates moving higher, and that is about as clear cut of a bit of evidence as you would want. You've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 9 of the last 10 days bearish, and not bearish by a small margin. Some of these massive downside days in the price of gold, you have to imagine it probably goes down, tests somewhat like this of a level all the way down here, down at the round number of 1800. So gold bearish, as we can see, does not like interest rates being higher for longer, being hiked, whatever it is, interest rates going up. Gold does not like that. Right. Oil, on the other hand, oil not doing too much, just chopping sideways, so markets not focusing on the price of oil in today's session, but short gold, short stocks, long the US dollar, long yields, which is obviously then short bonds, has been the way it's been played over the last number of months, and that continues on into today's session. 3 o'clock, manufacturing PMI could change that or could continue those trends. Anything 47.8 or above likely to keep these trends intact. Below that, it's a little bit tricky then. Trend is your friend. One day to release the opposite way isn't really going to change that too much. So that, as well as Jerome Powell. Now Jerome Powell, him and Fed's Harker, the Philadelphia President Patrick Harker, they have kind of a round table discussion of some sort with local employers and small business owners in order to have a chat about how they are going to grow the economy going forward. Does that present any opportunities, or does he end up saying anything of note in relation to interest rates or anything like that? It's obviously yet to be decided, as it is a bit of an open table discussion. So we don't have any notes out of it, or certainly to my knowledge don't have any notes out of it. We'll have to see what he has to say for himself at 4 o'clock, but we can't think about that just yet. Focus on the manufacturing PMI. Do markets do anything much until Jerome Powell speaks, should I say? Maybe not, but the trend is your friend. Pretty clear to see. Long-term trends continue, and that is not unsurprising until we get something to change that.